and taxes are determined. So I'm just going to take you through the flow of incomes and then how it ultimately gets taxed, and then we file the taxes and send the taxes, or are we going to get enough credits so that we don't have to do that? All right, so this should be pretty quick. All right, so this is a flow of the income processes. We see gross income. Gross income is all kinds of incomes that are accrued to an individual, to a corporation, that are taxed, subject to tax. So um, as we work, we're getting salary, we're getting wages, we have bank account interest. All those things are part of what we know as gross income. And then the Internal Revenue Code allows some adjustments that reduces the gross income, and then we determine the AGI, and then we decide on whether we're going to take a standard deduction or an itemized deduction depending on an individual situation. So that is exactly what the tax code offers individuals. Okay, then from there the taxable income is arrived at, and then we ring that through the tax brackets to determine what the tax liability would be. So in this case, uh, from the standard deduction, there is just an additional deduction that we call QBI, qualified business income, and that is a 20% on certain pass-through incomes or self-employment income, that the net of your revenue minus your expenses. That is the number we're talking about here. Take 20% of that, and that is an additional subtraction from the gross income. Then we arrive at the amount that we're going to apply the tax brackets to. Okay, so it flows from there to federal or regular or alternative minimum tax, and then these are going to determine whether or not we have withheld enough taxes during the previous year, or are we going to get enough credits to offset what the calculation reveal. Okay, so usually it's going to say you will have this tax liability, but in the course of the year you would have been paying your taxes either through estimated tax payment directly or through your payroll deductions. That determines whether you're getting a tax refund or you're gonna owe. Okay, so we ring it through the gross income, we take some adjustments, and then we arrive at this very important number known as the adjusted gross income. Then after that, we either take a standard deduction or we itemize our deductions. We take a further QBI deduction of 20% of our self-employment pass-through incomes. We then arrive at the amount that we're going to ring it through the tax bracket to determine what our tax liability would be. But for certain high earners, they would take so many deductions that another set of calculation known as the alternative minimum tax calculation will need to be performed to determine their tax liability. Okay, so then from there we decide.